with the gang, and we bout to go up. Switching lanes, it's a thing every time we show up. You a lame, and you so below us. Bet your hoe she know us.
Yo.
We glowed up, we stayed down. And came up, we stayed down. And came up, the gang up. I'm a villain that's winning. With precision, I'm killing. Represent the religion. Ended up independent. Took my car to the clinic. Let them check all the vitals. Middle finger to rival. Michael Jackson, my idol. Still ducking the pie holes. Talk to the plug every day except Cinco de Mayo. I still got me a Carlo. Still got Monte Carlo. Your car running so bad, it's think up the Apollo. Call my Rollie a Rollo. Call my AP a Al. I ain't talking seat belts when I say that I'm strapped. I'm in love with my side hoe. I sneaking through the side though. I'ma show you what we ride for. I'ma show you what we die for. Gang, and we bout to go up. Switching lanes, it's a thing every time we show up. You a lame, and you so below us. Bet your hoe she know us, cause you know we glowed up. Stay down. Came up, we stayed down. I'm with the gang, and we bout to go up. Switching lanes, it's a thing every time we show up. You a lame, and you so below us. Bet your hoe she know us, cause you know we glowed up. We stayed down, and came up, we stayed down, and came up, the gang up. I'm a villain that's winning. With precision, I'm killing. Represent the religion. Ended up independent. Took my car to the clinic. Let them check all the vitals. Middle finger to rival. Michael Jackson, my idol. Still ducking the pie.
Yo, what's good? Let's give it a few minutes.
Still got me a Carlo. Still got Monte Carlo. Your car running so bad, it's think up the Apollo. Call my Rollie a Rollo. Call my AP a Al. I ain't talking seat belts when I say that I'm strapped. I'm in love with my side hoe. I sneaking through the side though. I'ma show you what we ride for. I'ma show you what we die for. Gang, and we bout to go up. Switching lanes, it's a thing every time we show up. You a lame, and you so below us. Bet your hoe she know us, cause you know we glowed up. Stay down.
Yo, what's good, everybody? Welcome. So, let's give it like 30 more seconds and then we'll get started. So, I'll be going over Bitcoin a little bit, but I don't like it so much around here because there's not so much data. And then I'll be going over some other things that may be of interest. But what's good? What's up from Kenya? Is KE is Kenya maybe? Where is KE? I see we have some people from the UK. Welcome. All right, so okay, so let's get into it. So first things first. So Bitcoin. Right, let's get into Bitcoin, everybody. So Bitcoin. So let's start from the monthly chart, right? So the logic I'm going to use to analyze this is going to be the logic that I teach. You can even watch my playlist to understand this logic a bit better. I'm going to be working through liquidity, and then I'm also going to be analyzing it a little bit from the economical standpoint. But yeah, so let's start with Bitcoin. So Bitcoin right now is approaching a resistance over here. Right, so we're trading inside of this fair value gap, and that's acting as our support and resistance, and we're now approaching this resistance over here. So over here, if you guys are still in any longs, I would highly suggest you consider taking some profits if you guys are still in any longs. we called Bitcoin over here. More precisely, I actually specifically called this level 20.4K. And even more refined than that actually was the actual box that I drew, but I set my bids around 20.4K. But right, so let's get into Bitcoin. So Bitcoin, I actually sent out a chart the other day. I think it was like a week ago. I said I think the most likely draw is gonna be up here. That's the area that we're most likely to go to above this high. So above this high, I think we're likely to fuck around for a while and then ultimately reach this area. However, I'm not interested in betting on that because there's not a lot of data around here. Now, let me show you what I mean. So when we were down here, we had a lot of data to work with. What do I mean by data? Over here, we had all of this sell-side liquidity that was forming. Everybody was long in here. Oh, it's support. Oh, it's going to go up. They had their stops here, and then boom, we dump under that. Now, this dump, you can call it FTX. I just call it a stop hunt. But yeah. And then once we were down here, now we had everybody who was now looking to short, right? Oh, crypto is going to zero, blah, 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 blah. Everybody's looking to short. Stops here, here, and here, and also here. And that's how I called this bottom. And that's how I called that we're likely to see a retracement from here. Then we dumped under this. Now, when we dumped under here, this is when I called the most recent bottom. I said that from here, we're likely to get up above these since there is leftover liquidity over here. Okay, every one of these calls, though, I had data to work with. Where we're at right now, the only data I have is what's behind us over here. That's the only data I have. And that is why I can't make any good predictions around here. And I'm going to tell you that up front. So just so you know, the calls I'm going to be making around this area are more speculative rather than actual things I'm going to be making financial decisions on. Okay? So I'm not necessarily going to be making financial decisions based off what I'm going to show you in this market review. But now, once we got that disclaimer out of the way, let's get into this market review. So right now, this is a bottom for now. We have broken through this double top, which now means that all of retail is bullish. So there are two scenarios I would look for. So in the bullish scenario, right, because one of two things is going to happen. Either we're bullish or we're bearish. So now let's analyze the bullish scenario. So the bullish scenario would just be us continuing to go up without retracements. But the bearish scenario would be if we start retracing. If we start retracing, that means that now retail is bullish and they are getting opportunities to buy, right? Because if we're just going up, we're not giving them any opportunities to buy because they look to buy when we come back down here. So right now, retail did not have any opportunities to buy. So what I would look for, if I'm looking to take a short, I would look to see us retrace. So if I saw us retrace over the next weeks to a discount, that's when I'm probably going to start thinking that we're going to go down. Now, my opinion, there is no liquidity above this level. Nobody has stop losses here. So I think for that reason, we're likely to see a consolidation around here to accumulate. And that will form a resistance there and a support here. And then I will have data to work with. And I think what's most likely to happen is my opinion, this is just speculation, but I think we're going to get under these. Yeah, I'm not making any financial decisions on this. So let's move on to something where I can make financial decisions on. So Bitcoin, that's my opinion. I am sorry it's not much. I just don't have any data to work with here. One thing I will point out is that the cost of production for Bitcoin is at 24K. So that's likely to be a key price going forward. So yeah, this is likely to be an area we will. This is likely a price that we will see again, 24.3K. But yeah, that's just speculation at this point. So I'm not making any financial decisions here. So let's go next up into SPX, which is something that a lot of you are going to be interested in. So I'm going to start from scratch over here. So SPX, top 500 companies, S&P 500. Okay, that is, for those who don't know, that is pretty much the Fortune 500 companies, the top 500 best companies in the stock market. That is this index. So SPX, obviously, this is something that we should always anticipate bullishness on because it's the equities market. The currency always gets deflated, so this should always go up and make new all-time highs. So I'm going to give you guys my thoughts in this area. Right, so in this area, the data I have to work with is this resistance over here. And then we also have, well, this, I should go to the daily chart to mark out. And then we also have this big support. Now, these are areas of what? Liquidity. If we get under this area, we hit a lot of stop losses. If we get above this area, then we hit a lot of stop losses as well. So if we get above here, we're going to stop out a lot of bears. That's going to be us stopping out bears. Boom. And if we get under this like we just did, that's going to be us stopping out a lot of bulls. Okay? So let's take a look at what has been going on here. So first off, I'd like to point out that this resistance level is only relevant from this touch, right? Because over here we were still formulating it right over here, and then when we retested it here, that's when it became relevant. So this resistance level is only relevant from this touch, and then you see here we stopped out the bears right over here, and then we continue to go down. And then over here we stopped out the bulls by going out under here, and now we are in a program, in my opinion, to go up for here. So what I'm expecting on SPX is that we will go for this high, but the question is from where, right? So now let's take a deeper dive into what we're seeing here. So what we're seeing here is over the past weeks, right? I called this top over here, if you guys remember. I called that top over there. So what we're seeing over here is we have a lot of people who took shorts over here, right? This is a resistance level. This means when we approach this level, many people were looking to enter sales based off of this resistance level, right? Because we are humans. If we see something happen a few times, we're going to expect it to happen again. If you see price respecting this level in price, next time it comes here, you're going to look to buy, assuming it gets respected again. And well, the markets don't move like that, so you're going to get stopped out if you do that. So normal retail traders look to sell over here, okay? So they look to sell over here, and that means that there are stop losses over here. Now, how can we leverage this? How do we leverage this? The way we leverage this is now we understand that if we were a market maker, right? If we're a market maker and we're looking to accumulate a long position, this is a place where we can unload that long position. Because if you want to sell, if you want to take profit on a long position, you need to sell it to somebody. And here, if you want to sell something to somebody, somebody has to buy it from you. So here, there are buy stops because people who shorted here have a stop loss there. So if we get above this area, this could be a nice area for the market makers to distribute their positions. So let's take a further look over here. So now, what do we need to get up to this area? To get up to this area, what we need to do is we need to enter a buy program. And how do we enter a buy program? How does the market enter a buy program? The market enters a buy program when the smart money is in net longs and there is buy side liquidity. So now to figure out if they are in net longs, we just need to figure out where did they have opportunities to buy. And now that goes back to the sell side liquidity. So where did we have sell side liquidity? Well, we had this bullish trend line over here. So we cleared all of these lows that had sell side liquidity. Sell side liquidity is stop losses of people who were in long positions. So we cleared these lows and we also cleared this low. what do we have at these lows? Willing sellers at a low price. That is sell-side liquidity. Stop losses of long positions are sell-side liquidity. If you bought something and you're selling it, then you are a seller. So right over here, we triggered sell-side liquidity. Right over here, we triggered sell-side liquidity. Right over here, we triggered sell-side liquidity. What are those? Those are opportunities for the market makers to do what? To enter long positions. They can accumulate all of the sell-side liquidity, and they can use that to buy. Now they have willing sellers at a low price. Okay. Now here is where I have a theory. Okay, so I have a theory that this is where my speculation comes in. My speculation is that by taking this low, the market makers are now in a net long position by clearing this low. Why? Because I think that this is a key support level, and a lot of people had their stop loss right over here. And this was their invalidation. And the fact that we got under it liquidated their positions. Now, with that being said, am I open to us going lower? Yes, I am. Why am I open to us going lower? Because over here, I acknowledge that there's also sell-side liquidity. So what could we see? We could also very well get under this low, and I'm totally fine with that. I bought, my lowest entry was over here, and I showed you guys that. And my highest entry is probably around here. My entries are all between this and this. That is where my entries are. So if we go under this, I have no problem with that. I will still hold my position if we get under that, because I know that in the grand scheme of things, we will get back up here so that they can distribute their long positions. How am I so confident in that? Because I know that they accumulated the long position when they cleared all of these lows. They accumulated the long position, and they will look to distribute that long position. Where will they look to distribute it? Up here and up here. Why? Because there's willing buyers up here. Because if you short and you want to close your short, then you need to open a long. Right? This goes back to the first episode of the How to Trade series. If you short and you want to close your short, you need to enable an equal and opposite force to that short, and that's a long. So if you are short with a stop loss here or here, then once we stop you out, then you will be doing what? You will be opening a long, which makes you a buyer. So there are willing buyers at this price and this price, which means that the market makers will be able to distribute their long positions that are accumulating right now at these levels. And that's why I'm sure that we will reach those levels. Okay, so on SPX, I'm looking for us to get up to this level. And I think right now we're accumulating to do so. And I'm not saying that this low here is the bottom. I'm open to us going below it. As I said, we could go under this. I could see that happening. That makes sense. But it also makes sense that this is the bottom right over here. And that is why I've entered a long position already from here. Okay? And I know that we will get above here and above here. Because that is where they can distribute their long position and they can take profit on it. Okay? So my thoughts are on SPX, if that's not clear, is that we will take out this target and this target. Now, one thing I'd like to add is, let me just take a look real quick at next week's news events. Right, so next week we have Canadian dollar CPI, we have US dollar FOMC, we have GBP CPI, we have dollar unemployment claims again, which is every week, I guess. Tons of news for the euro, PMI for the dollar. Next week is going to be a great week for trading. I think we're likely to see a lot of heavy movements. So I think next week will be determining where we'll go. So if we look at the weekly chart, it could make sense for us to bottom out here. It could also make sense for us to get under this low and then go up for that. Let's take a look at the NASDAQ. Now, this is what made me buy ES where it was. But honestly, in hindsight, I wish I bought NASDAQ. Now, let me show you guys what I have been seeing on NASDAQ. So on NASDAQ, I was analyzing the weekly chart. And when I bought SPX, NASDAQ was down here. And it made perfect sense that NASDAQ would go up, which to me meant that S&P would also go up. Now, I honestly didn't expect for us here. Let me just put it into proportion real quick. This is the daily chart on SPX, and this is the daily chart on NASDAQ. NASDAQ has had 1, 2, 3, 4 consecutive bullish days. SPX has, in those 4 days, 1, 2, 3, 4, has only had 2 bullish days. So look how much stronger NASDAQ is than SPX. NASDAQ is going for these highs over here so that they can distribute their long positions, and it's also going to go for this high over here so that they can distribute the rest of them. SPX is also going for those, but I think SPX might take a little longer. I think what we're likely to see next week is we'll see NASDAQ raid into this fair value gap over here and then continue higher. And I think that this raid into this fair value gap might lead SPX because it's so much weaker. It is possible that we will see this. Yeah, I'm not gonna be bidding towards these lows because I think we might be saving them for later. So this is what made me buy SPX, because I saw NASDAQ at this key area, and I just thought, yeah, it makes sense. If NASDAQ's gonna go up, there's no way that SPX is gonna be left behind that much, right? And look what happened. We got a fat green weekly candle on NASDAQ and not so much on SPX. So yeah, that is NASDAQ and SPX. Any questions, guys? Let's get some questions answered. Sell-side liquidity at 3,700 would be less likely. This is 3,786 over here. I think that this sell-side liquidity right now is less likely. I think it could be something we'll come back for in the future. So if we don't see a bull run after taking out this high, and we instead decide to consolidate, then I think maybe then we'll go back for that and then go up. But yeah. Do I look at COT reports? The COT, for those who don't know, COT is Commitments of Traders reports. They pretty much show you any traders who trade with large funds, what their positions are looking like right now, because that is the commitments of traders. I don't look at them for the reason that, well, I do sometimes, but I don't look at them because I can already tell, this chart gives me enough data to see that type of stuff, right? I can see what opportunities they had based off of this chart, and then I can estimate based off that. COT, in my opinion, is data that is fed to you by them, and it is I don't think it's as reliable, even though overall it plays out. You only get data once a week, so it's not that much data. It's really only good for macro, but it's pretty obvious what we're going to do in the macro. We're going to go up on the macro on SPX, and I mean, yeah, I don't use COT really. No, I don't. Right. I already covered crypto, so you can watch back for that. Anyways, let me give you guys my thoughts on the dollar. So dollar overall, I think that we will. I have a few areas that I'm interested in. So I have this area, and this area. Now I know this looks a little bit confusing. Now let me break that down for you. So I think right now, last week I pointed out that I think we're likely to head for these relative equal lows first. But I also think that ultimately we will go back for this area, and I also think that ultimately we will go back for this area. So right now my bias is like this. This is how my bias is. I think we will go to here, and then from here, based off what we see around here, I will evaluate whether I think we're gonna do this or whether I think we're gonna do this. So those are my thoughts on dollar right now. So right now I'm looking for dollar to come down here. Now the reason I'm looking for that is because we just cleared buy side liquidity over here, which means now they're likely to be in net shorts because they cleared buy side liquidity. That's an opportunity to enter short positions. So now if they're in net shorts and there's sell side liquidity, we are in a sell program. To where would that be? Likely to these relative equal lows, because that's sell side liquidity. So that's why I think we'll come down here. But then there is leftover buy side liquidity up here, because notice how this is the liquidity I was looking at, right? These highs. Notice how we just slightly got above that, even you could say respecting this level. Now this is a level of resistance and there is buy side liquidity here. So I think that ultimately we will get above this to hunt that leftover liquidity. So why is there a leftover liquidity here? Because liquidity doesn't just rest on one chart. It rests within the market. The dollar chart is literally the entire market. When you long Bitcoin, you're longing Bitcoin against the dollar. You're shorting dollar. When you long SPX versus the dollar, you are shorting the dollar. When you long euro dollar, you are shorting the dollar. So the dollar is this chart. If it goes up, then this affects all of the other charts. If it's going down, it affects all of the other charts. That means that this chart conveys the liquidity of the other markets. Let's just say there is something like this, bullish structure, stop losses over here, and we just get slightly below this on the dollar. This doesn't mean that euro dollar went for that liquidity. Euro dollar might have made the low over here. It doesn't mean that fucking SPX went for this liquidity. It doesn't mean that. So this is why you want to see a proper stop hunt like this. And only when you see something like this can you confirm that the liquidity is actually taken. So over here, this is just not enough. It's got to go at least like up here, at least up there, for me to be confident that this liquidity has been cleared. So dollar, ultimately, I think this area is inevitable. And also, I think that this area is also likely to be taken, but I will reevaluate all of those things once we clear these lows. So right now, I'm looking for us to gravitate down to this. So let me just add a magnet over there. Right, so that's the dollar. So dollar down is a risk-off scenario. It means people are going to be less risk averse, which means more money is going to be flowing into the markets. Dollar down means there is more money flowing in the economy, more money circulating, and that's what causes the increase of supply, which makes the dollar go down, right? People spending money increases money velocity, which is the metric that is used to calculate the supply of the dollar. So dollar going up means less money circulating in the economy. Dollar going down means more money circulating in the economy. Dollar going down means people have more money to spend, which leads to higher stock prices. And that is why I think that that's another confluence for SPX going up. So let's get into another chart. So just because we're doing an entire market review. So next thing I'm going to be looking at is, let's go for bond yields. So bond yields, I covered that last week and the week before that. I called this top that we have seen over here. And I'm expecting us to go down for these lows, draw down to here, and then come down to here overall. Now, what do bond yields have to do with anything? You're probably thinking, what the fuck is this chart? Why are we wasting time on it? It's useless. Let me tell you what this chart means, okay? Because I think you guys don't have a clue what this chart means. Bond yields are pretty much, if you don't know what a bond is, it's pretty much, it's something that you buy from the government. You like loan money to the government and then they pay you back, and that's the yield. So right, so when we were up here, it was at 4.3%, that means your bonds would have yielded you 4.3%. Okay? 4.3% per year. And then now it's at 3.4%. So now let's think what this means, right? If bond yields are going up, that means there's going to be more demand for bonds. More people are going to want to put their money into bonds. If bond yields are going down, that means less people are going to want to put their money in bonds. Okay? So what does a move down on bonds all the way down to here mean for the markets? Let's think. What does a move down all the way to here mean for the markets? That means that all of these huge funds, institutions that hold these, because bond yields, the way they work is every so often bonds are issued, and then tons of hedge funds go ahead and they buy them, and then they sell them. Tons of people with tons of money, they just buy those bonds, and then they sell them back to the markets and they include their fee in there. So pretty much this means that all of these big guys that have so much money in bonds, like banks, for example, why did we see all of these banks crash? Because bond yields were going down, which led to bond prices going down, which caused them to get liquidated. That is literally why we saw all of those banks collapsing. So what does this mean for the markets? This means that people are going to be moving their money, investors are going to be moving their money out of bonds to where? More likely to the rest of the market. So if they're moving their money out of bonds, where are they going to look to put it? They're going to look to put it in stocks. They're going to look to put it in indexes like S&P, which is stocks as well. And that leads to higher prices. So bond yields going down means more money flowing into what? S&P or like stocks, which means higher stock prices. This is historically proven. You can see over here, this was a big uptrend on bond yields, and that is when we saw money coming out of the equities markets. And that is why we had this downtrend on the equities markets. Let's take a look. We topped out at January of 22. Okay, January 22 is when we topped out. Let's look, where is January 22? Okay, right over here is January 22. And you can see from here, bond yields went for an insane bull run. And that is when SPX topped out. Okay, so bond yields coming down to here. You know how insane this is for equities. This means that all of the equities are going to move up by a lot. Okay, so a move down on bond yields is going to be fucking crazy. It's gonna really drive the markets up, in my opinion. So this is crazy. This is something that's really nice to have by your side when you're in an S&P long, like I am over here. Okay, so this is good for S&P long. Anyways, let's get into something else. So something I've seen a lot of you guys asking about is gold. Now I haven't been, the reason I haven't been analyzing gold so much is because I just didn't like the chart. But let's take a look at it because I think you guys are interested in it. So let's take a look at it. Right, so gold. Let's take a look at the monthly chart. So on the monthly chart, okay, so we can see, right, so, okay, so right now it's pretty obvious where it's headed. It's headed towards these highs. Now, why is that? If we think, where did the market makers have an opportunity to enter positions, right? Let's take a look. Right over here, they had an opportunity to enter long positions. Why? Because we liquidated longers, which means there's sellers at a low price. And then now this was their first opportunity. The second opportunity is now there's bearish structure. So what is there? Over here, people are placing bids to take sell positions throughout this entire place. What does that mean? There are willing sellers at all of these prices. This means that the market makers can decide to buy from them here, buy from all of these guys, and they can just buy from all of these sellers. And then later they can sell to them at a higher price above these highs, and they can distribute their position up here. what is likely that we will see above these highs? It is likely that when we get above these highs, we will go for an even bigger bull run. Why is that? Because if you think how price is booked, let me tell you how price is booked. So the way price is booked is, if you want to buy, the way price is booked is, if you buy, then it will pair you with the nearest seller, and that is the price. So if, let's just give you a random market. Let's just say this is the market and there is a seller here, and this is the current price. If I buy now, price is going to move up to here. Why? Because that's where a seller agreed to sell to me. So if you want to go ahead and buy, let's just say a Lamborghini, and people are only agreeing to sell a Lamborghini for 500K, and you buy it for 500K, then that is a fair price, and that is going to be the current price. So pretty much that is how prices work. So now if you think over here, there's a lot of people that are looking to sell at these prices. So if you're looking to buy, there's plenty of sellers to be paired with you over here. But above this, there are no sellers. Above this point, there are no sellers. So what does that mean? That means that what can the banks do? They can set their own sell limits here, here, and here, for example, and then they can buy from themselves. They can buy from themselves here, they can buy from themselves here, and they can buy from themselves here. Let me show you where this played out. I'll show you where this played out. Look at S&P. S&P had this dip in COVID. They hunted sell-side liquidity, and this gave them opportunities to accumulate long positions. Okay? Now, between these prices, there were likely a lot of people looking to sell. So if they wanted to move price past this, then they had to use a lot of money, and they had to buy a lot of long positions. But then once they took price above here, there were no longer people looking to sell above here. So what could they do? That allowed them to sell to themselves, and that's why we saw this insane bull run past this high. They could have just set a sell limit here, and they could buy from themselves, and that's where they'll get booked, and that's what the price will be. They could set one here, and then they could buy from themselves. And how do they unload their positions? They unload their positions by letting people buy. Now, when did this top out? Let's look, when did this top out? Take a look. Throughout this entire thing, we'd see no buy opportunities. Zero buy opportunities on the weekly chart. Zero. And then what do we see over here? Bullish structure. What do we mitigate? The discount. Everyone is finally buying here after an insane bull run with no retracements. All of a sudden, they see a retracement. You best believe they're buying after such a bull run. You best believe they're buying over here. And then this is when all the dumb money enters the market, and that's when we top out. You see? So what are we likely to see on gold, in my opinion? I think we're likely to see exactly what I just said. Exactly what I just showed you on S&P. I think we're likely to go for a bull run above this high, and then sometime in the future, we're going to see an opportunity to buy like this, and that is when we'll top out, and then you'll see a retracement. And yeah, that's my prediction for gold on the monthly chart. Let's go down to the weekly and daily chart. So now our bias is to the upside. So on the daily chart, let's see what we did. So we just cleared that. This looks like our next area with liquidity. Banks likely have sell limits here to unload some positions. So once we clear that out, expect a small retracement before we continue to go up. Yeah, there's not much to analyze here, so just up on gold, bullish on gold. So yeah, this is it. We analyzed 10-year bond yield, dollar, NASDAQ, ES, Bitcoin. Am I missing anything? Anything else you guys would like me to analyze before we call it a stream? Any final questions? Euro dollar, I just gave you guys my thoughts on dollar, so that's pretty much my thoughts on euro. If I am bearish dollar, I am bullish euro dollar. Ethereum, I gave you my thoughts on Bitcoin. actually, you know what? Ethereum is a little bit different, actually. You know, Ethereum is a good idea. I'm going to analyze ETH. Yeah, let's go ahead and do that. Ethereum is a good idea. Right, so on Ethereum, I think that we would be likely... Okay, so first off, Ethereum will be acting from this range over here. And then we tapped into this fair value gap over here. That's when I called the Bitcoin bottom. And I would say that this is our most likely draw. This place right over here, 21.61. Let's go down to the weekly chart. On the weekly chart, these two highs were the main buy-side liquidity, which we just cleared. Now, why am I not saying that this high is as much buy-side liquidity as these highs? I'll tell you why. Because if we had broken this low, then this would have been bearish structure. But right now, this isn't bearish structure. So people are not using this necessarily as an invalidation, but they're using these as invalidation. So on ETH, it's a little tricky. I think it's likely we will come to this area. I'm not making any financial decisions on this. I would be cashed out at this point. This would have been my terminus on ETH. I'd be fully out now if I was in a long position. But I think that our draw on liquidity is going to be up here because there is some liquidity there. Yeah, there is some. Yeah, I would look for us to draw up to here on ETH, I guess. But I don't know. I would be out of my positions here. There's not much to analyze on the ETH chart either, to be honest. So ETH chart, not so much to analyze either. Yeah, pretty much same thoughts as Bitcoin. I still want to see us. I still need more data. So I want to see us consolidate or something. Give me something that I can work with over here and I can give you better thoughts. There's no point for me to analyze any other... You know what? Actually, there is something that I could analyze that could help us. It's called USDC.D plus USDT.D. This chart. Why is it not loading? Let's go to USDT dominance. Okay, so this tells you where the money is in the markets right now. So if people are holding their money in stable coins, that is a risk-on scenario because they're not looking to be involved with any risky assets. But if people are pulling their money out of stable coins and moving it to assets that have risk involved in them, then that is a risk-off scenario. And the risk-off scenario is a bullish scenario because people are putting their money into assets, and risk-on means people are holding onto cash and they're scared. So right now what we're seeing on stablecoin dominance is we've been in an uptrend for a while, and now we're starting to go down. Now, where is the likely draw for this? It's likely that we will draw down to this place. This means that if we are likely to go down to here on stablecoin dominance, that means that there is likely more upside on other crypto coins, which supports my theory that we will draw up to this area on Bitcoin, up to between 33K, 32.4K and 37K. So this area, in my opinion, is a likely draw on Bitcoin and Ethereum. And this area down here is a likely draw on stablecoin dominance. So yeah, this concludes my thoughts. I think I'm not making any financial decisions based on this because there is not enough data where we're at right now. But I think that we're likely to go to these places. And then here I am making financial decisions based off of this data. I am taking long positions based off the data we have on SPX And I am taking long positions on SPX based off the data we have on bond yields. And I am taking long positions on SPX based off the data we have on the dollar. But on Bitcoin, there's just not nearly as much data as there is on SPX at the moment. So that is why I'm sidelining for now. But yeah, this concludes this market review, guys. It was a lovely stream. Make sure you subscribe and join the Telegram channel. Well, you're all probably in there already, but yeah, peace.